Welcome to the Entre-Preneur Show. This is your host, Michael Mara. I'm the CEO and founder of Entre, a social network for entrepreneurs, investors, and freelancers. On this show, we interview the top CEOs, venture capitalists, angel investors, and founders. Connect with me and thousands of other like-minded people by signing up for free at joinentre.com or download our mobile app on iOS and Android. On this episode, I am interviewing Ben Zises, aka the SuperAngel. He's an investor, advisor, syndicate lead, and fund manager. He's the first investor and founding advisor to Quip, Caraway, and Arber. He's also made several other investments in early stage startups, mostly focused on consumer, prop tech, and future of work. Super excited to have you listen to this episode. We talk about a ton of stuff, including his experience as a founder in real estate, with syndicates, rolling funds, and how he got started as an investor and how he's growing into now a fund manager. I hope you enjoy the episode. All right, welcome back to another episode of the Entre-Preneur Show. We have a fantastic guest with us today. Welcome to the show, Ben.
Thank you so much, Mike. Pleasure to be with you today.
Yeah, likewise. I'm very excited to dive into this. I mean, we've gotten to know each other a little bit over the last few months now, and you've been a huge asset to our community and everything that we're doing through events and whatnot. You're known as the SuperAngel around the world now. So I'm super thrilled to have you here and dive into this. I think you have an incredible story that will help a lot of founders, but also, even people that want to become angel investors too. I know you spend a lot of time really diving deep into this investing over the last few years, and you've become, in my opinion, one of the up and coming investors like in the world for startups. And I think you're adding a lot of value to the entrepreneurs that you work with, and even giving insights to people that you don't work with and giving advice and stuff. So really thrilled that you're here, and I'm excited to dive into this. I think it'd be extremely helpful for people to give a little bit into your background. I know you were in real estate for a while. You started a company too as a founder. What led you down kind of this path first of being a founder, and then we'll get into all the investing stuff later and how you made that transition too.
Cool. Yeah, it's a pleasure to be with you. And it's been fun attending the Entre events and watching you build your own business and grow, and all the great hosting work you're doing on Clubhouse and Twitter and the rest of your team. So just to get into my early background here, I just, like a lot of people, have been entrepreneurial just in my blood. I started a DJ company with my twin brother in high school, and we went around just doing school dances, Sweet 16s, and all types of events. And then actually in college, I started a water business selling, coolers to students in off-campus apartments. I think I had visited a friend at, I think it was University of Wisconsin, and I saw that this was a business that students could build there, and I decided to take that to Boston University. That was my college business, and just learned from doing. And then after graduating school, one of my first jobs was in real estate, and I did retail store leasing. So I was hired by owners as well as tenants to find them vacant retail space. So for one of my clients asked me to find them locations to open up. Actually, it was a Verizon Wireless wanted to expand in New York City, and they hired me to find them locations to open up their stores. And I couldn't imagine. It was just a very inefficient process of going about finding space. And like other entrepreneurs, you sort of, you experience a problem firsthand and you look to solve it. So I sort of like to tell this story of how I would rollerblade the streets of Manhattan at night, and I would write down phone numbers from signs, to see which spaces, and then I'd call the brokers and I'd put the information together. And it was just a super time-consuming process. So I felt like, how did this get to this point? And so my first startup was similar to Zillow or StreetEasy, just the way you would find an apartment or home to live in. It was an online marketplace to search and advertise for vacant retail stores. And so that company was called RetailMLS.com. And I went through the whole founder journey. It was a real estate prop tech company. and went through the whole fundraising stage. I raised several $1,000,000 from, a laundry list of friends and family, angels and seed funds. And I really experienced the founder journey firsthand. I spent 4 years hiring a team. I had a lot of success in many respects, but ultimately I like to say I made every mistake in the book. But, for those of us who are in business where we know, certainly that there's always more mistakes down the road. And it was through that experience where I struggled to raise additional capital. And my business in 2014, unfortunately we had to shut down the company. And it was a tough pill to swallow, both for myself, our team members who stuck with us, as well as the investors. So that was the sort of end of my operating and founder journey.
Very interesting. And what, if you could look back on it, what were some of those lessons that you learned that maybe knowing what you know now, you could have kept the company going, or maybe found a way to pivot or something like that? Or was there any key insights that you understand very well now, or you've seen through some of the other entrepreneurs that you work with that you wish you would have done differently?
It's a great question, and there's no doubt. I think one of the first things that comes to mind as far as one of the biggest mistakes I made was I overbuilt the product. And so I think, as an entrepreneur, you often, have so many great ideas. And I think the cadence for when you release different features or which products you put to market, I think the key is making sure you build, the proper, like I said, cadence, right? You want to make sure you build a sustainable business, that you're not just adding new features, because every new feature, especially both hardware and software, it requires maintenance and it requires capital and it takes time. And so you can really end up in a bad position if you're not building in the appropriate order.
I absolutely love that. And that's something that I've learned firsthand, building Entre for the last couple of years. When I first got into all this, and I see a lot of entrepreneurs, too. You want to do everything, and it's so hard to do all of that and all the things at once. And you lose focus, and then it's hard to prioritize everything at the same time. And so yeah, we've spent a lot of time over the last really 6 months dialing things back. And in this next version that we have coming out, it's going to allow us to focus on a few key things that we are really excited about. And yeah, I wish, man, it's so funny how seeing and hearing and talking to people like yourself, if I could have done this 2 years ago, how much differently things would have gone. And that's why I love these podcasts and stuff, because for everyone watching, you can hear this stuff now and you don't have to go through that. And podcasts and books, they're so phenomenal. So what was the next step after that? So the company ends up shutting down. What obviously as a founder and an entrepreneur, it's not easy to take that on, right? And a lot of people look at that as a failure or whatever. But I think you approached it differently. So how did you take that, and then what did you do next to move onward from that?
Yeah. So just to close one more point, part of my mistake in overbuilding was, you go out and meet with customers and they tell you all the problems. And, I'd come back to the office and I'd have my product team and dev team just try and fit every feature into the software. So certainly sometimes you do want to get user feedback, but at other times, as Steve Jobs says, they don't, your customers don't even know what they want. And you really have all the information at hand. So just prioritizing and focus, which we just talked about. But to move on after my startup was closing down, it's a little cliche, but the concept of when one door closes, a window opens. I was certainly someone that experienced that type of situation. It was 2014, and in New York City, my office was right in the heart of Silicon Alley. It's known in the Flatiron District. But what I was at a party on the weekend, and I ended up hearing a conversation of some people that I didn't even know across the room talking about a toothbrush subscription company. And at the time, I'm sure a lot of our listeners might remember, I had been an early customer and one of the early adopters of Dollar Shave Club, which was just such a transformational and innovative consumer product company. And their viral video was just one of the funniest marketing videos, would go in a Hall of Fame if they had one. And so I was just such a fan and customer and really aware of, especially as a founder myself, other startups that were really doing things in the ecosystem. And again, when I was at this party and I overheard someone talking about a toothbrush version of Dollar Shave Club, immediately my ears perked up. And I walked over and I just started talking to some people and asked for some information. And they said, I asked to end up getting introduced to the people that were building this company. And so a few days later, I get introduced to two incredible young guys, Simon and Bill, both of whom had full-time jobs at the time, industrial engineers and product designers. And I just invited them into my office and just immediately fell in love with them and the concept that they had to create an oral care brand that was just so innovative and design focused. And just, the industry, like so many, was just very stale and hadn't been reinvented with a fresh new design and just a beautiful concept of subscription and all of those great things. And so I offered to help them, having just gone through that whole journey myself, fundraising, pitching dozens or hundreds of VCs myself across New York, Silicon Valley, and all these angel investors. And so I offered to help them in any way I could with their pitch deck, with introductions, and was fortunate to hand them a check at the time. It was my first angel investment for $10,000. And this company ultimately became Quip, and decided to just immerse myself in supporting their business. And that kind of kick-started everything, but I'll take a break and see if there's questions at this point.
Yeah, it's pretty wild. The first angel investment is just an absolute home run. Are they a unicorn yet? Have they? Is that public that they've got valued that high? Because I know they're probably close if they haven't.
Yeah, so unfortunately, there isn't, recent public information, so I'm unable to really give much more than that. But I will say they have millions of, subscribers, and they've certainly created an entire, set of competition and reinvention in the category. But they are most certainly the category leaders, and they're available now. A lot of these consumer product companies. You got to be omni-channel, to reach everyone, right? I mean, e-commerce obviously is insanely, quickly and growing, but at the end of the day, you still have 80% of people that purchase these items in physical retail stores. And so Quip was just recently announced a partnership with Walmart. So they are in all the Walmart stores nationwide, Target, and a bunch more retailers in the pipeline. And no question, there's a big part of luck involved. And had that not worked out the way it has, maybe we wouldn't be here today. But certainly that's, a very fortunate circumstance, which got me started down this path of being, at this point now, I'm a full-time professional angel investor.
Yeah, it's incredible. And as Jason Calcanis says, it was a yum, right? But that's awesome. And it's funny too, because Dollar Shave Club completely opened the door and gave them exact model to what could be done in almost any other product and consumer company product, whatnot. It was pretty crazy. So it was very impressive that you saw that foresight that, okay, this same thing is probably going to happen in many other consumer products. right?
Yeah. And, what's interesting is if Dollar Shave Club, their market at the time was, men with beards, and, a toothbrush is men, women, kids. It's a bigger audience. But certainly at this point, it feels like almost every category that you would walk down the aisles of your convenience store has been disrupted with some, online digitally native brand.
Yeah, it's very, very interesting. And I know you have invested since in a lot of other consumer brands as well that have also done really well. How did you? So you started making some of these angel investments. What how did you then dive deeper into it? I know you've been really learning and diving heavily into understanding what makes an angel investor successful, and understanding all of that, learning from the top of the top people in the industry. How did you dive into it? Can you share any great resources or things that you learned that really clicked for you as an investor and that led you to make better investments as you got going?
Yeah, absolutely. So it's not like at that time I had said to myself, this is a career that I'm going to pursue full time, but it was just it's the excitement and passion of early stage companies and founders. You just can't find that with, in many cases, in larger companies. And I've always been entrepreneurial, and to sort of be able to champion, in my opinion, founders who are more capable than me, because it just felt like such a natural fit for me. So I really just immersed myself in everything angel investing. And you already mentioned Jason Calacanis, and he's someone who I've been, starting with reading his book, which I always recommend to people who are looking to get into the space. His book's called Angel. And that was just one incredible resource of many that I, dug into. And I really, with anything, even in other areas, like my goal is to just learn from the best, learn best practices. And whether it's podcasts, books like Jason's, as well as others, I tried to just soak up everything I could from those who came before me, right? I mean, you obviously always looking to have an angle, but at the same time, just like founders want to learn from investors, investors want to learn from other investors who are more successful. So I started to get known, and to sort of build your credibility, if you don't promote yourself, who will? And so I had no problem letting people know my role with Quip. And ultimately, it was a great thing, because I ended up getting tremendous deal flow, just inbound, whether a founder would see that from Crunchbase or other online places that my name was listed, Angel List. And I would get incredible founders who would reach out to me and tell me about their consumer product company. And that was sort of a calling card, and I got known for that. And but the truth is, at the time, 2014, I didn't have a lot of extra cash. So I was back in a job in the real estate business and sort of earning money, because angel investing is just really money out the door. And eventually, although I continued to invest in Quip over some subsequent rounds, a few years later, it wasn't actually until a few years later where I started to be able to make other small investments. And I even started myself putting in small checks through other syndicates led by other more established investors as a way to learn. And I always recommend people, it's a great way for others to learn about the industry, is you could put $2,500, $5,000, sometimes as little as $1,000 into a startup that's been diligenced and being led by a more prominent investor who's more, has a better ability to analyze an investment. And so I started to make very small investments, but ultimately, starting in really 2018 and 19 and 20, I had a little bit more disposable income, and I really picked it up. And one of my other early investments was a company called Caraway Home, which the founder reached out to me completely cold. So a lot of people don't believe in a cold email. Not only do I believe in a cold email, to me, I think it's even better than a warm email, because I think it's more efficient. Why are you letting someone else tell the story for you? Just go right to the source. I do it myself, and I've had success. And here's a perfect example. I got a cold email, I think it was early 2018, from an exceptional, I think a 25-year-old founder who was building the way he described it is, I guess, a modern day Williams Sonoma, but almost like the cookware version, a cookware brand with similar attributes to Quip in the sense of super eco-friendly, design heavy, a lot of, just a great product with an exceptionally strong brand. And I sort of decided to dig in and sort of do that whole journey again. And I ended up writing the first check into Caraway, which today it's 1 year in business. It's arguably one of the fastest growing consumer product companies of our generation. They're an extremely successful company, and the pandemic obviously helped with the tailwinds with everyone cooking from home. But if you would ask me, like, what led me to invest in that company versus there's dozens of other cookware brands, I think this brings up sort of the next conversation, which is, how do you make a decision on one company or founder versus the other? And the truth is, at the very early stage, it's almost more of an art than a science. And the founder themselves, whether it's one or multiple founders, to me is the biggest criteria and selection criteria that I really want to understand what drives this person to want to do the impossible of basically spending the next 10 plus years of their life, committed to one cause, and to really sacrifice so many other things, because you read the headlines of a company gets funded or sells for $1 billion, but what you don't read is to give Scott Belsky a quote, the messy middle, right? Everything that happens between them, what these founders go through, what I went through for 4 years with my own startup, it's a really tough slog, and the ups and the downs are really just they're tough. They're tough, and so I want to be able to really gain a perspective on, is this someone who has that chip on their shoulder, that I guess I like to say unwavering ambition to build a multi-billion-dollar company, because that's the ambition, right? Like, anyone who sells for $1 billion, you better be sure their visions are probably much higher. I mean, to them, they might feel like, okay, I've left something on the table, but sort of like, you want to aim high, as high as possible. And that way, even if you don't reach that ultimate goal, it's still a massive success. And so understanding the personal journey of the founder, or maybe some unique attributes of how they grew up, what their environment was like, who they've looked up to, those are one of the biggest things I look for.
Yeah. And you brought up a lot of great stuff there. I definitely want to dive into, you mentioned syndicates and this stuff. We'll dive into that later, especially once we talk about your fund now. But on one of our previous events, I think it was either a pitch competition or the angel investor panel, you mentioned, I think, like 4 or 5 other things that you look for in a founder. The first was the unwavering ambition to build $1 billion company. I think you brought up something about being obsessed with the perfection of the product. And then if you want to dive into the others, and I'm not sure if I'm getting those right, but there was I remember writing those down somewhere and really thinking hard about them, because there's stuff that I think was these 4 or 5 things that you said it really hit home with me, and what I'm doing and how I look at myself as an entrepreneur. And I think it'd be really important for others to hear those, and then to understand what investors look for in founders too, because I think you're spot on. I think from what I've learned and understood from a lot of investors that we've interviewed or had at our events, or from Jason and other people that I've listened to through podcasts and videos, these things were very similar, and they were kind of like the ties that I saw between investors. So I'd love to have you share those.
Absolutely. So I even have a slide. Yeah, I mean, it's a big slide in the deck for my fund, under key selection criteria. And the first thing, like we said, was the founders and the team, and having that unwavering ambition. The second thing I list is relentless pursuit of perfection and product obsessed. And again, perfection can certainly be an enemy of good, I think is the saying. You don't want to be perfectionist to a fault, which sort of gets you into that problem that I personally am guilty of overbuilding my product, wanting to, but at least to just have that pride of craftsmanship, especially for a consumer product, because there's so much junk out there to capture the attention of millions of consumers. I just think the product has to be so incredibly well thought out. Let's not look so far. We can just point to Apple, and they're they're just the most beautifully designed consumer product company. And, there's a reason why companies like Peloton or Mirror, other hardware brands, people are constantly thinking, okay, Apple should buy them because it's just such a fit, because of the design heavy approach. So when it comes to consumer products, to me, design is at top of the list. But the other thing relative to the founders themselves are the ability to learn new things and absorb information fast. So, let that sink in for a second. Learn new things and absorb information fast. We're in a world where, it's just, there's so much information and there's experts, right? But the truth is, a founder, they might be a designer, an industrial product designer, or they might be a performance marketer. They might be a supply chain expert by trade and sort of have spent their career. But if you want to be a founder and CEO, you got to learn quickly. You got to learn quickly about all the areas of a business. And so to me, that's so important. A founder, even just fundraising alone is its own unique set of skills. And there's just different terms and different ways of going about it that you just, if you're not sophisticated and quickly able to understand what do I need to know to pull off a successful fundraise, I think you're going to have trouble reaching that ultimate success. So a story I like to tell is one of my founders, was sort of trying to figure out how to compensate early employees with options. And, one day on the phone with them, they had never even, come across any of this. And it was maybe, a week later, I ended up on the phone with that founder, and he was more versed in options and restricted stock purchase agreements than the lawyer was. So he just quickly became an expert in a few days by just probably spent, the entire week, all day, 24/7 online reading and becoming an expert. And to me, that was one of many signals that this is someone who, I want to get behind. And there's going to be things we don't know, but to the extent you can quickly become somewhat of an expert in all these different categories, that's a really important thing I look for.
Yeah, those are such. I'm actually going to share out this slide here, if you don't mind, because it's incredible. All of these things that you have here. You perfectly summarized everything that I've learned in like the last few years in just like one slide. It's incredible. So if you don't mind, I'll share that along with this episode so people can see that. But yeah, incredible stuff.
And there's obviously a lot of other things. Just two others, resourcefulness, right? You got to figure out a way to do more with less, and then resilience. Those are two that come to mind. You're going to get knocked down, left, right, center. One thing I like to say, actually, I wear it with a huge badge of pride, is the fact that I've probably heard no much more than anyone I speak to, any founder I've spoken to or anyone else. And my goal in life, professionally, is with respect to business, is I want to hear no more than anyone else. Because you better be sure that to the extent I'm hearing no more than anyone, I'm also hearing yes. And so to me, being able to quickly rebound from the lows and sort of move on and just live to fight another day, that's a quality that, from my experience, in the sense of pattern recognition of the successful founders I've been fortunate to invest in and be part of, that's something I see time and time again.
For sure. Yeah, there's so many ups and downs, with it. It's tricky, and that's why like this unwavering ambition, relentless pursuit, like, product obsessed. Like those words are like how I look at everything, how I approach Entra, and how I, it's really key that founders, because I, now having spoken and talked and worked with so many entrepreneurs of all angles, I can tell like who's actually gonna, they don't just think it's a good idea. They actually like really like want to see it through to the end. And I think the word obsession is often has a negative connotation to it. But if you look at the successful people across different industries, like even just sports, Michael Jordan was the best, arguably whatever, because he was just relentless and obsessed with winning championships. Same with LeBron, same with
no matter
Kobe.
how many he won, it wasn't
Exactly.
about the dollar signs. It was
Right.
it was a pride in craftsmanship. He had this, I don't know the right word. When it comes to a product, I call it magic. Like, when all these things come together to sort of create success, it is magic, but it's something at the very core that drives you. And I really just try and assess if a founder I'm going to give my money to has that quality for sure.
Yeah, very. And it's funny too. I mean, you can see it in so many other cases, but yeah, great stuff. We'll attach it in the show notes and everything. I'd like to move on a little bit into kind of, you brought up syndicates. Rolling funds is obviously very common now. I know your SuperAngel.Fund is through AngelList, and it'd be great to have, share a little bit about that. What led you to going from an independent angel investor to now starting a fund, and share people how that works too, because it is relatively a new thing if people aren't quite familiar.
Yeah, absolutely. So basically, like a lot of people, COVID accelerated certain things in my life, and I also was fortunate to have my first child about a year ago, and was burned out from my professional role where I was actually running a real estate company as the chief operating officer. It was a massively growing, successful business, but my passion was in all of the side hustles, if you will, that I was doing, and the nights and weekends of supporting founders personally with small checks, $10,000 to $25,000, and I loved it so much. I was spending so much time doing it. I decided 6 months ago that I wanted to make it a career. And as we talked about earlier, it's not angel investing as an angel. It's not an income producing venture. So the fund was definitely a means to be able to support myself while doing what I love. And I had, over the last several years, besides my own investing, as I'm sure others experience, it's fun to angel invest with friends and family and your network. And also it supports the company. So a big part, the biggest value I really deliver to my founders at the earliest days is my network. Being able to bring in other strategic investors to the company at the earliest days was something that I've been pretty successful doing, and I'm very comfortable fundraising. And so I started to formalize all the investing I was doing through syndicate to sort of capitalize on the interest from my network. And so really over the last 2 years, I started to write a deal memo for all these companies, a specific company that I would personally invest in, and I would send it around to my network. First, it was just an email, capture, see if others wanted to participate in that investment with me. And AngelList has enabled with this product called syndicates, someone like me to, they form an entity and create what's called an SPV, a special purpose vehicle, which is it's an entity where I guess as many as 199 investors can pool their capital in small increments and invest in the company. And as the lead of the syndicate, in this case me, I would earn a 20% carried interest. Once the investors got their money back from the investment, I would be able to participate in 20% of the profits. And so it was a way for me to, get a benefit from bringing in all these investors into the opportunity. So I did about a dozen syndicates and raised $3 million from 200 unique investors over the last 2 years. And this was something that was just, I was in so many ways, I was successful at raising money and, finding companies that, seemed very promising and have started to certainly prove themselves to be, that I felt like, hey, let me, to do this full time, I'm going to raise a fund, which aside from that 20% carried interest that I would get from the syndicate when these companies had an exit, which we know takes 5 or 10 years, the fund has a management fee. Generally it's around 2% per year of the capital in the fund. And that is what pays effectively like a salary to any fund manager while they, wait until there's a meaningful exit in these companies down the road. And so at the time, AngelList had just started to talk about a product they've created called rolling funds. And, I jumped on it. And to me, as basically an emerging fund manager, almost like a startup fund manager myself, I didn't have a legacy platform of, lawyer and fund documents to sort of work from. I wanted to try something new and innovative, and it couldn't have been better timing. So I signed up and, I had a relationship with AngelList because of the syndicates that I'd been running on their platform for the last few years, and was invited to participate in their early access program for rolling funds. And so what a rolling fund is, unlike a traditional fund, investors can invest much smaller increments. In my fund, it's $10,000 per quarter, and you can be flexible. So you can adjust up your amounts of how much you want to invest on a quarterly basis. And it gives you time to get to know the fund manager and see the types of things they're investing in. So every quarter is a new fund. You can both invest and raise money at the same time. So normally a fund will need to, they'll set out to raise $10 million. They'll go spend a year pitching everyone they know. But during that time, they're not focused on sourcing deals and investing. And so they might have missed out on so many opportunities. And so it's super flexible. And the fund launched on January 1st with more than 50 investors and 2 million and counting committed to the first year. But that's growing every day. I'm taking, as the days go, I'm able to take in capital as well as deploy it simultaneously. And each quarter is its own fund. It's been great so far.
Yeah, it's really changing, I think, early stage investing. And from a founder perspective too, and depending on the type of business that you have, I like this approach way more than, some other, trying to raise money from, or VCs and stuff like that. It can make it a lot simpler of a process where you can get to know an angel investor or, and do a syndicate rather than, try to get a lead investor and all this other stuff. It can be a lot more tricky. Plus, generally, the terms can be better dealing with angel investors rather than VCs and stuff too. But I love this too because and the reason that I like angel investors so much, like VCs, I can kind of go back and forth with.
VCs, to me, it's like a predatory term.
Right.
So I'll never, my hope is to always be known as an angel fund. That's how I express what I do. I don't know why. It couldn't be more opposite, right? Like venture capital feels like so predatory, and angel is an angel.
Right.
So I hear you. The reason founders look to bring angels on, whereas they have to bring in a VC, they feel like.
Right, exactly. And I think that's what's really changing. I think equity crowdfunding is changing a lot of this too. And some platforms are actually shifting more to this like AngelList model because like even with our campaign now, we have a lead investor. Like they're starting to kind of do the same model that AngelList is doing anyway. But it's great because I love so in and the reason that I really respect angel investors most of the time more than VCs is because I look at them as entrepreneurs, right? They don't have a job, right? VCs is very corporate investing, right?
And they're not investing their own money. They're investing, institutions and they don't have that same connection
exactly
or care.
Exactly.
It's more transactional often.
100%. And as a founder, too, most VCs have never been an entrepreneur and have never invested their own money into anything. So that's why especially with what we're doing, obviously being an entrepreneur network and whatnot, I relate so much better with angel investors and some VCs who were previously entrepreneurs. But I'm never going to take money from a VC that never was an entrepreneur and doesn't invest their own money because it just doesn't fit our brand and our style and how we approach it.
I've gotten to some, Twitter back and forth with folks who, I was arguing just what you said, which, and that actually leads me to this concept of empathy, right? And so even Josh Koppelman from First Round talked about how when he looks to bring people into the investing team at First Round Capital, right? I mean, one of the best early stage venture funds in the world. He said the first thing that he looks for is empathy. And I think the way to most authentically have empathy for founders is having been one. So that's not to say that there aren't incredible investors who, for one reason or other, their trajectory didn't put them in a founder role, and they're fantastic. But I entirely agree with you. And in my experience, more often than not, those who have gone through the founder journey are, end up being able to really understand what it's like and perhaps be more supportive in their role as an investor. But just to add one thing to AngelList and rolling funds, which I wanted to touch on, is they have enabled angels to turn into, I hate to say VCs, but a fund manager, right, or a super angel, right, through their rolling fund model or their syndicate model, because without having to contact a lawyer and pay tens of thousands of dollars in legal documents and open up a bank account and hire an accountant, AngelList is a one-stop shop solution. So they handle the entire fund administration on behalf of my fund, SuperAngel.Fund. And it's hard to say. I mean, I think I certainly would have done this irrespective. However, the time it took to get the fund launched and the support that they provide me is just truly incredible. And it really opens up my plate to do what I love to do, which is support my founders and source great deals. So you used to have maybe 2 or 3 partners to start a fund because one, would need to be the finance or operations, one for, this or that. But the truth is, it's enabled what's called a solo capitalist or a solo GP. And I'm really the living example of that, to do this by myself. And that's not to say that I'm not going to maybe bring on some other partners as I grow. But they've certainly, created this new model, and it's picking up steam in the market in a really big way. And I feel really fortunate to have been in the early program. And I'm excited to work with AngelList and grow my rolling fund to be the biggest rolling fund in the world, to the extent I'm able to have, over a certain limit of LP investors, because I know there's some restrictions regarding how many investors can be in a fund, which, is hopefully going to be able to increase over time as SEC rules might change. I love being the conduit for people making their first angel investment, just as certain others were for me, enabled me to learn from them. Anyone who invests in my fund will have the ability to see every company that I have vetted and I've decided to invest in. Besides the fact that I'm obviously, my own money is in the fund, so I'm an investor in the fund, and that's my primary vehicle. I'm not looking to make investments that are outside the fund. But yeah, for each investment we do, if those out there are not familiar with the deal memos that I write, I'm always happy to share them with anyone. But certainly, if you're an investor in the fund, you will see my deal memos, be able to understand what did I like in this investment, why did I make this investment, how did it come about, and that's certainly going to be a perk for any investor who's not full time like I am. And to that point, Michael, like you would probably just agree. I mean, if you want to be the best in the world at something, how can you not do it full time? I mean, I know there's a lot of people out there that are, raising a fund or making investments as a side thing. But at the end of the day, at least for me personally, I don't pretend to not have this specific ambition. I mean, my goals are simple, right? Like my goal is to be the top angel, performing angel fund in the world and be the best in the world and deliver returns for my LPs and scale the impact I have of investing in founders that are overlooked, that haven't had prior success. And there's just so many people out there that go around saying they invest early when they don't actually invest early. And of the 30 companies that I've invested in, half of them were pre-launch. And I've been the first check in 5 or 6 companies to that end, one of which I met through you at one of your events. They were the winner of a pitch event. And I ended up writing the first $50,000 check in the company about a month or two later. And so I want to be there to fill that hole that I feel like is just missing, which is being able to have conviction without third-party validation. And the fact that I'm a solo GP, at least today, allows me to make a decision immediately. I don't have to go and sell myself or the company and this deal to 3 other partners. I just need to get comfortable and have conviction, and I can send money within 2 or 3 days.
Yeah, it's changing so much, and I think you're going to be at the forefront of this. I think venture capital is about to go through a massive transition, and I think a lot of things are going to everything's going to end up going to the investors that are the most accessible and most empathetic and founder friendly. And you definitely see that, and you're definitely going right in that direction. And I think, a lot of the classic term for founders talking to venture capitalists is you're too early, right? And even if they have revenue and a product and all this stuff, and there's some, obviously there's different levels of investing and different risk appetites for different investors and whatnot. But this is why I personally love angel investors, and especially first check writers, with just that ability to have the foresight and the conviction to trust founders and believe in it way before others do. So I love what you're doing. Real quick, as we wrap up here, what feel free to share what you're investing in, what the check sizes are, and then what you're really excited about going forward. Like, are there any specific I know you have specific industries that you like, but are there any specific things that you'd like to see, or maybe if people are working on, they should reach out?
Absolutely. I appreciate you giving me that opportunity. So the categories that I'm focused on right now are consumer products. But, as we all know, it's becoming increasingly competitive. And as we talked about earlier in the episode, it's like every category has been D2C or disrupted. And so it's harder and harder to play that game just as a straight consumer product company, given the competition. So that's expanded my thesis towards what I call e-commerce infrastructure. And so I sort of like to say it's like selling shovels to people who are digging for gold. And what I mean by that is I'm now investing in software companies that support the high growth and all of those consumer e-commerce brands. And one of which was a company called Settle, which is basically a competitor in some ways to Bill.com, but it's an accounts payable software aimed towards high growth consumer product companies, incredibly user-friendly software that lets you manage all of your accounts payable. And they also offer financing by factoring your receivables and financing payables. So that's a company which I would recommend any founder who's operating a consumer business today or e-commerce brand to check out. So certainly that's those two areas within consumer, both products and then software that supports them. And then prop tech, so real estate tech. Having led a real estate tech company myself and managed a pretty big real estate investment and property management firm for 10 years, that's just an area where I have subject matter expertise. And it's a market where I have an advantage in. And so those are the three areas. Now, the last one, which speaks to sort of what I'm excited about for the future, actually, let me just answer. The check sizes from my fund will be $50,000 to $250,000, and that'll probably grow over time as the fund grows itself. But that's definitely our sweet spot today. The area where I'm excited about, to me, it's everyone sort of calls it future of work, and I would just say, the world changed in March of 2020 when COVID really came through. And so to that end, you have so many founders and talented entrepreneurs who have decided to attack the different areas that COVID has impacted our lives, both personally as well as professionally. And so to me, I'm not quite sure, and I understand, funds have disciplines and strict criteria, but to me, as an angel, I don't know how you could not be open eyes and open-minded to what I call future of work, just given all the talent that is now building in this category and all the value that's going to be created over time. So I've started to make a few investments that would fall into that software category, and they end up, a lot of the best companies in the world are both consumer and enterprise. I mean, you use Zoom to host your grandma's 90th birthday party, but you also use Zoom for your business. And so, I think people feel like they need to put things into a bucket, but, to me, future of work will encompass, a consumer and enterprise business both in one.
For sure. And primarily pre-seed, seed, are you doing anything beyond that?
Yeah, so I'm very, as we talked about, love being the first check, pre-seed, and but at the same time, we'll invest alongside the leading venture fund in a seed round or even up until the Series A. So really, to me, under 100 million is where we will invest from the fund. But as we grow, we'll consider other types of opportunities. But I always give an asterisk relative to where I invest, because at the end of the day, we're in the business of exception cases. I mean, that's what we're looking for. And so I'll find, there's going to be a scenario where I'll meet a founder who's building in a space that I might not list as my focus, but we will make exceptions for exception cases as they arise. And I just think being open-minded and keeping, constantly learning and being curious and seeing where the world goes is a really, it's a smart thing for any investor who wants to be part of the future as opposed to maybe missing out on it.
Yeah, opportunistic, right? If the situation is there, you jump on the opportunity. I want to bring up real quickly before we wrap up. You've spent so much time in real estate. You're in New York. What, in your investing in real estate, all this stuff, what's going on? Where do you have any insights in it? Like, there's so many people leaving New York. What's going on there with retail and all this stuff? Do you have any thoughts around that topic? Because obviously a lot of people are moving from New York to Miami, elsewhere. What's going on there, and what do you see the real estate market looking like for the next 6 months and beyond?
Yeah, it's a great question. I get asked all the time. So I would say real estate, as many of us would know, is one of those very much old-fashioned legacy businesses that has always been a little slower to adopt new technologies. And obviously, with the boom of prop tech, they've come around to it. And a lot of the biggest real estate owners and players have actually, become LPs in real estate-focused funds or have started their own venture funds in-house. To me, a perfect example is, I think the problem with real estate is it's been, set in its ways with these long-term leases, right? I mean, WeWork is a perfect example, but the end of the day, I think the young people, but even older people, what we love on demand. We don't, instead of buying cars, we call an Uber when we need one. Instead of, booking a hotel, that fits into a bucket, we grab an Airbnb. And so what I believe is happening and will happen in real estate is performance real estate and on-demand flexible real estate. And so, WeWork had some failures, but they had some unique successes, and specifically the ability to book space short term. So I think I was just reading that, real estate moving forward is just going to move towards more flexibility and short term. So even just retail in particular, instead of having to sign a 10-year lease or not open up a store at all, you're now going to be able to book a space on demand just for the day, the week, or the month. And one of my investments recently, which I've yet to announce, but I'm happy to share it here today, is in a company called Neighborly, which is doing just that. And so they're opening locations, hopefully in every mall and every main street in America. And they're allowing people to book a retail space on demand and pay just a percentage of sales. So you don't have to guarantee rent for the next 10 years of your life, because we don't even know what next week is going to be like. So a company like Neighborly is going to enable people to open up, host an art showing, or be able to have a yoga class in the space without renting out a gym or a studio, just on demand. So performance real estate, I think, is going to be the future, and we've seen that already with residential too, with all of these short-term rental companies that you basically just pay as you go, and you don't even need to buy furniture. They just furnish it for you, and they even do programming as well. So I think even though a lot of these businesses have struggled, I think they will eventually, the concepts will persist and be the future.
100%. It's so funny. Because I was actually looking. I saw Neighborly, but I didn't know you were an investor in them, because I've known them for a while. I know the founders, and when I think I originally found out about them on Jason's podcast, we reached out. We actually partnered with them on a few events in San Francisco and LA. So I've been in Neighborly. I've used it. Really cool. And I love what they're doing. The founders are awesome too. And
shout out to Ben Seidel. He really,
Ben's great.
Form of COVID, everything having to get shut down, and he's got a fresh look on the biz and ready to sort of take over the world over the next few years. So it's been, was excited to get support him and everything that he's doing. And that's great that you already have a relationship with him.
For sure. Yeah, and I actually really think we'll be able to, once things open back up, they're going to be one of the first people that we reach back out to start doing these events. And I think that's the future in one way or another. Obviously, they had to put things on pause for COVID, but they're at the forefront of that kind of on-demand space game. And it's really great. So as we wrap up, where can people follow you? Where should they learn more about you? I know you're pretty active on Twitter, and now Clubhouse too. So where should people follow up if they want to learn more, or reach out, or just say hi?
Yeah, I appreciate that. So my email is firstname.lastname@gmail, ben.zises@gmail, but my website, SuperAngel.vc. You can also see my fund information at SuperAngel.Fund. Follow me on Twitter at Zises, at SuperAngel. That was the fun day when I was able to get that Twitter handle at SuperAngel. So, and then if you want a little bit more fun, I try and not take things too seriously. And you can even watch a little video I made by going to SuperAngel.video.
Yeah, it's hilarious. And yeah, it's actually, I was looking it up too. I'm pretty sure it's the number one search result for Super Angel on YouTube. So they can just type it in there. It's great. And Ben, this was awesome. Thanks so much for your time. I'm excited to see all the things that you continue to do and how you continue to support founders. And I'm sure we'll be doing more stuff together as well. But thanks so much for coming on.
Thanks for having me.
Thank you so much for listening to another episode of the Entre-Preneur Show. If you'd like to connect and network with other like-minded people, entrepreneurs, investors, freelancers, and startups, check out our app or go to our website, joinentre.com. Thank you so much for being a part of our community. If there's anything that we can do to help you, please reach out to us and let us know.